It's Tuesday, so it's time for another Money Matters segment. According to a study by the University of California, Berkeley, only about 10% of traders are able to consistently make a profit and succeed as full-time traders.
Today, our financial expert, Ernest Burley, is here to talk to us about a subject many people are curious about, but many don't know where to start: investing. Mr. Burley, thank you so much for joining us today.
Thanks for having me.
So before a person decides to buy a stock, what should they know and what should they do?
Right, so first of all, the stock, there's a company behind the stock, right? So there are a lot of different things to look at. You can look at the cash flow of the company, the profit margin, whether it pays a dividend or not. A lot of things to look at, but even PE ratios and all this other kind of stuff, it gets a little complicated. But here are the things I mainly look at. I look at the past performance of the stock, which past performance is no guarantee or indicator of future performance. So let's put that out there. But I still look at the past performance. I look at the current performance of the stock. I look at where I think that stock's going to go into the future based on what the market is currently doing. Because there are a lot of industries out there. You have telecom, tech, healthcare, utilities. So I look at what's going on in the economy, look at the stock, and see if that's a good fit for this moment in time.
Absolutely. So for a lot of young people who want to get into investing, what would be some of those tips for people that are just starting out?
Yeah, so that's a tough one. So like starting out, I recommend a person just get into an index fund, right? So because if you don't know what you're doing, you don't want to put all your money into a stock or various stocks that are going to not do well for you. So it's better to get into an index fund and just kind of look at that thing for a minute and do some research. Some people buy stocks from the companies they deal with a lot. They're like, oh, I shop there all the time, so let me buy stock in that company. So do some research before you get into individual stocks, because that's different than like going into an index fund or a mutual fund. You have more insulation, more protection there as opposed to an individual stock.
And say someone has an individual stock for maybe 2 years, maybe it's Tiffany's stock. They have it for 2 years. They decide, okay, I'm ready to sell. What are some of those tax implications they might face?
Right. Well, it's a good thing if they held it 2 years. So when you're selling a stock, well, here's another thing. We talked about this in a previous segment. Hopefully there are no tax implications, because ideally you want to trade within a tax qualified plan. So I talk to people all the time, they're trading, and I'm like, okay, is it in an IRA? Well, no, it's just in this little investment account. Well, no, put it in an IRA. You can trade within that and have no tax implications. But if you're outside of that, sometimes people, they come to me, they have all this money because they've inherited or what have you. If you have a regular account, ideally you want to have long-term capital gains tax on the money instead of short-term capital gains tax. And the difference is short-term capital gains tax is just like ordinary income. Now talk to your tax professionals, but the current tax rate, highest tax rate, I think is almost 40%, like 37%. Long-term capital gains tax can be anywhere from 0 to 20%, so you pay much less if you hold a stock at least 1 year and a day. So hold it at least a year. If you hold it less than a year, you're going to pay short-term capital gains tax, which is a much higher tax rate.
And so is that when you should sell a stock? Is towards the end?
Well, so that's a good one there too. So some people are stock huggers. They hold on to a stock forever. Some people just get rid of stocks. Like the day traders we're just talking about. You hear about people always talking about they made so much money day trading. Most day traders lose money, right? So that's not, buying and selling the same day is not ideally the way to go. Some people look at this. There's a theory out there to say, once I make a certain amount in a stock, I'm going to get rid of it. So once I've made 50%, I'm out, right? It's hard to implement that, though, because if you see your stock continuing to rise, you're not going to want to get up that pony, right? So, but if you just say, I'm going to pull the trigger and I know I'm not going to lose money, I've gained that amount of money, I'm going to lock it in and use it for something else, then that's what some people do. Once they get to a certain amount of gains, they sell.
And I've heard a saying that says buy low, sell high. Can you talk a little bit about what that means?
Right. So most people buy high and sell low because they invest on emotions. So you can't get emotional with stocks. You have to do your research and just hold it, because sometimes it's volatile. So buy low, sell high, that means you want to buy it at a lower price than you sell it at. So if you buy it $100 a share and it goes down in value to $80 a share and you get scared, I'm going to sell. That's buying high and selling low. You want to sell it when it's above $100 a share. Just like when you buy a house, you want to sell it for more than you bought it for, right?
So you want to keep it.
Yeah, you want to keep it until it appreciates in value. Unless it's just a clunker and it's never going to recover, then you have to cut your losses at some point.
And what exactly is a dividend, and should you only invest in dividend-paying stocks?
Good question. So a dividend is basically just a company sharing their profits with their shareholders, right? So the board of directors gets together, hey, we made this much money. We're going to share this amount of the money with our shareholders. I love dividend-paying stocks. Most of the stocks I invest in are dividend-paying, but if I'm more partial to appreciating stocks. So if it's an appreciating stock, I'm going to get on that bandwagon. Sometimes you can kill two birds with one stone, get an appreciating stock, and it also pays a dividend. So that's killing two birds with one stone. But I'm more partial to appreciating stocks than just requiring it to be a dividend-paying stock.
All right, Mr. Burley, a lot of great information. Thank you so much.
Thank you.
And individuals should contact their own financial professional and attorneys to help answer specific questions or situations before taking any financial action.